Hello and welcome to the Money Talks podcast. I'm Andrea Heng, your host, and welcome to Money Talks Explains. This is where we have a burning question that we want to ask, and we find someone, an expert, to come into the studio to explain it to us. So every quarter, the Monetary Authority of Singapore, MAS, releases something called a Monetary Policy Statement. Now, this statement, in a nutshell, tells us what the Central Bank of Singapore is doing to manage our economy. Now, this involves a few things, but the one that we want to focus on today is something called the Singapore Dollar Effective Exchange Rate. It's such a long name, so we call it SNEER, or some people call it S NEER. Now, in a high inflation environment, instead of moving interest rates, our central bank makes adjustments to this SNEER. But what on earth is it? And how does it affect your money? Well, we have someone here to help us explain this. He is Jeff Ng, Head of Asia Macro Strategy at Sumitomo Mitsui Banking Corporation, Asia Pacific. Hi, Jeff.
Hi, thanks for having me.
A pleasure. Good to have you in this studio. Now, as the name suggests, the SNEER involves adjustments to the Singapore dollar and its exchange rate, right?
That's right.
Explain to me in simple terms how this exchange rate is derived in the first place.
Sure. The exchange rate between the Singapore and other currencies is derived from demand and supply.
Okay.
So if there's a lot of people overseas who are demanding for the Singapore dollar, usually it strengthens. Okay. And if there's no one who wants our Singapore dollar, then of course it weakens. When we look into the Singapore dollar nominal effective exchange rate, it is a policy tool that's designed by the authorities because we are a very trade open economy. That means we trade a lot compared to our size of economy, about 3 times more. And I think that helps the authorities to manage inflation. For Singaporeans, we are always worried about our teh o kosong or teh C getting more expensive.
Yep.
So we have to manage a bit of either through interest rates. When you increase interest rate, it helps to lower inflationary pressures. But in Singapore's case, because the economy is very open, so they try to manage it through the exchange rate.
So, are there other currencies that operate the same way that we do?
Not many. In fact, we are the one that has this theory called managed float. So within the policy, there's some flexibility. So the currency is allowed to fluctuate against all the currencies in the world by some percentage point. But if it's too excessive, the monetary authority will then adjust and limit the weakness or the strength.
So, how does SNEER work in real life, right? You talked about our teh C, our kopi kosong and all that. So when I travel, when I shop online or when I buy a house, how does SNEER affect me?
I think something very recent was the COVID-19 pandemic, as well as the supply chain shortages that happened thereafter. So imagine that the prices of your food, your fruits doubling overseas because of the supply chain shortages. So perhaps from $1 becoming $2.
I remember the price of chicken was also impacted, right?
That's right, because of all the export curbs and Singapore couldn't get them cheaply. So when the Singapore dollar was strengthened, was adjusted upwards, I think it was about 10%. So it helped to reduce. So perhaps the cost was increased from $1 to $2, but because of the improvement in the Sing dollar policy, so that helped to mitigate the $2 towards, let's say, 180. So some discount there.
What are some other examples of how global events actually affect the SNEER? Things like the US interest rates going up when the Federal Reserve decides to hike interest rates or cut interest rates, or maybe the oil market. There's a global oil shock, for example, or even now when there are tariffs on the back of our minds, or rather at the front of our minds. How do all of these events affect the SNEER?
The MAS manages the monetary policy by aiming for price stability. So the main focus is that, but they also do have an eye on economic conditions. So for instance, in 2015, when oil prices plummeted, I remember that time the oil prices was more than $100 per barrel.
Yes.
So when you drove, you felt the pinch. And then after that, the prices came off by a lot towards, I think sometimes as low as $20 per barrel.
Yeah.
So the authorities felt that the inflation was becoming lower, so undershooting their expectations, and then they decided to lower the pace of Sing dollar appreciation because they were not expecting the inflation price, the price pressures, the inflationary pressures to be as high.
Okay.
Then I think similarly when we saw the COVID-19 pandemic, the economy was slipping into a recession. So when your currency is appreciating, it also makes your price of exports quite strong.
Right.
Yeah,
Correct.
quite high. Then maybe no one will demand for our goods and services.
Exactly.
So that in that situation, then the MES decided to firstly recenter to the prevailing level, to reset it to the prevailing level,
Okay.
and also to reduce the slope towards zero, which means that there's no appreciation of the Singapore dollar
Right.
to help to support economic growth through this export channel.
Okay, so is inflation the only situation or scenario that the MAS will move the SNEER or adjust the SNEER?
I think price stability is the core objective.
Okay.
But at the same time, economic conditions do impact. Both MES as well as the government. They do have a holistic approach to managing both the monetary policy as well as fiscal policy. So it's a bit like managing the dollars and cents to make sure that the revenue and the expenditure is enough, and also making sure that the Singapore economy is in a healthy stage. I think when price pressures are quite high, there's also possibly accompanying symptoms like maybe the economy is doing quite healthily. Then it makes sense to appreciate the Singapore dollar to help to reduce the inflationary pressures. But during a downturn, I think people are putting discounts maybe to buy to sell their leftover products but nobody want to buy. Then I think that's where the authorities may decide to keep a weaker Sing dollar to help.
Okay, so here's the thing. We understand during COVID, everything was inflationary also, right? Inflation started even before that in 2019, right? So that's when the MAS stepped in and said, okay, we'll adjust the SNEER to make prices stable. And you talked about price stability a lot here. Here's what I don't quite understand. If prices are stable, why do we still feel like we're paying more for certain things? Like things are still more expensive at the end of the day. So does that mean that the SNEER isn't working? How would you explain that to the coffee shop auntie or uncle who's drinking his kopi and realizing, hey, why am I paying 70 cents more?
When we look into inflation, it's always a number. So it's compiled through some index.
Okay.
So it's compiled monthly. So you can see the comparison compared to the previous year or compared to the previous month. So sometimes you can see the number quite instantaneously. Sometimes for us, when we visit the coffee shops or we go to the supermarket, maybe we don't buy that sweet that we want, or we don't buy the specific fruit that we want or food. Then when we realize it, it could be that the prices have already adjusted for several months. So that explains perhaps a bit of a difference between how people feel the prices are increasing. And then I think sometimes as well, prices are increased at different stages. So some coffee shops increase in January, some supermarkets increase in February. Then you feel that, the pace of price increases are
constant,
right? Yeah, but for the inflation numbers, they are calculated as like one number, one figure, taking into account the weightage of an average household. So there's some differences in terms of the sort of like quantitative calculation and how people feel it, because everyone is different.
Explain to us in the most layman terms possible how the SNEER is adjusted. So here's what I read, I hear things like they adjust the slope and the width of the policy band. Apparently there's a center. You talked about this center, moving it back to the center. When we hear these terms, band, width, slope, in my head, I think of a seesaw at the playground, and then the center is that middle piece that gets to move. So what's the simplest way you can put it for us?
The MES manages monetary policy through three channels, as you correctly mentioned. I would sort of like put it into an analogy. It's like traveling on an expressway.
Okay.
Yeah, so if they adjust the slope, so for maybe the speed limit may be adjusted, so you can perhaps drive at a faster speed.
Okay.
So the currency is allowed to, let's say, appreciate at a stronger pace.
Right, okay.
But then as for the center, I think it depends on, for example, how it has been moving the speed has been adjusting over the years.
Right.
So the center is a accumulation of that.
Okay, understood.
At that point of time.
Right.
And then the width is like how many lanes are there? Yes. If you have a traffic jam, then the width is very narrow.
Yes.
It means that perhaps the government or the authorities are happy with less volatility.
Right.
But if you have more lanes, you have more room to navigate. Then perhaps they allow for more adjustments, more currency fluctuations.
Which means it gives more room for the currency to move in that sense. Okay. But won't that translate to volatility? How does that allowance for movement translate to price stability then?
When the policymakers think about how to adjust monetary policy with all these parameters, of course, they have to make sure that it is suitable for the current policy.
Okay.
So I think usually they adjust the number of lanes when there's a lot of traffic, perhaps a lot of volatility. Yeah, so they want to make sure that they allow for this two-way volatility. However, if it's just one way, then it doesn't make sense to just adjust the width, for instance. And then in terms of the speed, the slope, it depends on, say, how bad inflation is. If inflation is 5-6%, then perhaps it makes sense to then reset it like the center. Change it, move it more abruptly from the start of the expressway towards near the middle. At once, so that you already see the progress in terms of the price pressures.
Okay. So it's more to give the authorities freedom of movement rather than the currency itself, or you don't get to move willy-nilly. They do really watch every movement that the currency makes then, if that's the case, right?
That's right. So I think they adjust the speed limit, the slope when there's modest changes to trends, but they adjust the center, like more abrupt shifts to where you are right now.
Right.
When there's more volatility, like what we've seen in the sort of like supply chain shift in 2022.
Does a stronger currency necessarily translate to more spending power, or does it come at a cost to Singaporeans? Say we earn in Sing dollar, but we also have to spend in Sing dollar, right? But so in my head, the benefits are offset in a way?
Yes, so I think it's always appropriate to have the right policy, the right strength in terms of the Singapore dollar. So imagine a worker, if the Singapore dollar is too strong, maybe he don't even have a job in the first place. Yeah. So then
there's such a thing as when the dollar is too strong, right?
Yes. Then you will not have even the Sing dollar to spend anyway. So it has to be at the appropriate level.
Right.
Then I think when you look into, let's say, the price adjustments, then it's at the right stage for Singapore and the workers to be able to spend on all the international products. Because when the currency is too strong, whatever you're exporting becomes quite expensive as
and then no one wants to buy your stuff.
Mm.
Okay, so when we spend that money, then it becomes a benefit to us overseas then, right? And that's why we saw so many Singaporeans traveling, because our Sing dollar was strong enough, or stronger rather, than say the Japanese yen. Is that a good example of how it benefits us in return?
Yes. But on the other hand, it's also bad for the economy, right? Because instead of spending in Singapore and
You're
boosting
spending it
retail
elsewhere.
sales, then you are spending overseas.
That's true. And that's also something I guess the MAS watches closely, right?
That's right.
Okay. How does a stronger dollar affect our investments? And if the SNEER is adjusted to weaken the currency, how do we then make our portfolio adjustments, if any?
That's right. So if the Singapore dollar is so strong, of course, the other countries, when they think about investing in Singapore, they do not have so much to convert to Singapore dollars if it's too strong. So I think, of course, it has to be at a balanced level. But if it's very weak, it also signals that the fact that maybe the economy is not doing very well, or there's some issues, then perhaps the MNCs or companies may think about investing somewhere else as well. So I think there are several factors in play. So I think it's about balance, I would imagine.
What about individual investors?
Yeah, I think, of course, there's some impact to it, because the exchange rate that the authorities are setting, I think it's a function of all the different currencies. And I think in recent years, we have seen the US dollar being very, very strong.
Yeah.
And the sort of like strong Singapore dollar, because of the authorities' adjustments, have helped to maintain a relatively stable dollar Sing movement. Then if you have investments in the US, then it allows for more sort of like stability, for instance. Because when you invest overseas, let's say in US stocks, you may also feel that if you are getting back the money in US dollars. If, say, the currency adjustments is too huge, it may impact you either way.
Right. So it actually is beneficial, not just for us, but for, say, the US market as well, to make sure that price stability is there. So because they need investments from us,
That's
individual investors as well, and they need the volume, right? So it
Yes.
needs to be affordable even with the exchange rate.
And we also got to note that it's not just the US dollar. There's also some regional currencies inside the basket, which includes the Malaysian ringgit, the Japanese yen, the Chinese yuan, and other regional currencies. So all of them are inside the basket,
Okay.
allowing for, I think, the MES to adjust and ensure that all the products that's being traded is at appropriate levels.
You mentioned earlier about how the MAS adjusts the SNEER. One of the things they consider is growth, economic growth, right? How the economy performs. So when the MAS publishes its quarterly announcement, it indeed also mentions a GDP forecast, right? So can you explain to us the link between the SNEER and GDP or growth?
So when the MES makes some projections about economic growth, if it's above or below trend, then it will spill over towards the labor market. So for instance, if economic growth is projected to be, say, 1%, then it may mean that the labor market, which is quite tight usually, loosens up. Then the wage growth may slow.
Okay.
Then price pressures may also be lowered. Then that may mean that the MES may not need to appreciate the currency so much.
Okay.
So in the inverse case, of course, if the economy is doing very, very well, every worker is expecting a 5%, 20% wage increase, then of course it makes sense for them to strengthen the SNEER a bit more to help to limit the price pressures that could come in, because every worker with their salary increase may then want to spend more.
In this case, a stronger currency might not be a good thing because it throws things out of balance and then it has those knock-on effects that you mentioned, right? Hopefully, we've asked all the right questions when it comes to the SNEER. I think I understand it better now. I think it's a while to really sink in, but your highway analogy was a good one. So thanks for being our Money Talks explainer, Jeff.
Thank you. My pleasure.
Do you have a finance thing that you want explained? We can help you. Just send us an email to cnapodcasts@mediacorp.com.sg and we'll take a look. Thank you for listening to the Money Talks Explains podcast.